Okay, so let's continue. Even though our network is not very good, so I'll do the recording and drop the link on the group tomorrow. So I'll do it now and upload it tomorrow for us to watch, because I don't know what to do with this network this period. So like I was saying, borrowing cost is not to be capitalized if the fund is used to purchase an already made asset, right? Like if you use the money to buy like a motor vehicle that is already available for its intended use or sale, you are not supposed to capitalize the borrowing cost for that. If you use the money to buy a house that is already available for its intended use, you cannot capitalize the borrowing cost for that, right? You can only capitalize the borrowing cost if the asset will take a longer time to get ready for its intended use or sale. So you cannot capitalize the borrowing cost for an asset that is readily available. Is that clear? So that's all about borrowing cost. I did a voice note on that and sent to the group already. Some people have listened to the voice note, but I believe some have not done that. So today's class we are moving to IAS 16, which is the standard that covers property, plant and equipment, PPE. It specifies the accounting treatment, the recognition criteria, the measurement principle for property, plant and equipment, PPE. That's the standard we are looking at today, right? So IAS 16 is what we are looking at today. So like I said, IAS 16 outlines the accounting treatment for most types of PPE, right? So we have other standards that covers other aspects of PPE, like for other aspects of properties, plant or equipment. So this standard is talking about equipment, properties that you use for your daily operation, right? So you may see a building, you may classify that building as your PPE. Another person will have similar building, but that person may classify that building as investment property. So when we get to IAS 40, we'll know more about investment property, right? When we get to IAS 40, we'll know more about investment property. Then the same building, another person will have similar building and classify it as asset held for sale or discontinued operation under IFRS 5. So we have different standards for properties, but this IAS 16 is talking about property, plant and equipment that we use for our operation. So if you see in another book and the book is referring to a building as investment property, don't get confused. Or maybe when we get to IAS 40, we are talking about investment property and we are referring to land, we are referring to a building. Don't be confused. They are not the same thing, right? Though they have similar features, but they are not the same thing. So the scope of IAS 16 Like I said, IAS 16 does not cover investment property, that is asset property held for capital appreciation or for rental income. IAS 16 does not cover that, right? IAS 16 does not cover non-current assets held for sale or discontinued operation. IAS 16 does not cover that. IAS 16 does not cover agricultural produce. IAS 16 does not cover that. So this IAS 16 covers only property, plant and equipment used for daily operation of the business. So the scope of IAS 16. IAS 16 should be followed when accounting for property, plant and equipment, unless another international accounting standard requires a different treatment. Can you still hear me? Please react if you can hear me.
Let's start it first.
React if you can still hear me. Hello, can you still hear me? Okay, so let's continue. So like I said, IAS 16 does not cover biological assets that relate to agricultural activity apart from bearer biological asset. I will explain what bearer asset is, right? I will explain that later. Then it does not cover mineral rights and mineral reserves such as oil, gas and other non-regenerative resources. IAS 16 does not cover this. IAS 16 also does not cover investment property or PPE classified as held for sale, which is IFRS 5 covers that, right? However, the standard applies to equipment, property and plant used to develop these assets. Like I said, IAS 16 covers our daily assets used for our daily operation, right? That's what IAS 16 covers mostly. Now I said I will explain what bearer asset is, right? Bearer asset, we have like a grapevine, right? There are those assets that are solely used to grow biological or produce biological assets, right, over a long period of time. Like we have grapevines, rubber trees plantation, right? The plantation itself, IAS 16 covers it, but the tree that grows on that plantation, right, is not covered by IAS 16. It is covered by another standard. I think IAS 41 or so, that talks about agricultural asset, right? That is what covers that. But the plantation itself that houses the rubber trees, or the grapevines that houses the grape trees, they are the bearer assets. So they are part of, or they are under, or they are within the scope of IAS 16. Is that clear? Are we following? All right, so let's define the key terms under this standard. We have property, plant, and equipment. They are tangible assets that are held for use in the production or supply of goods or services, for rental to others, or for administrative purposes. That's property, plant, and equipment. Then cost is the amount of cash or cash equivalent paid, or the fair value of other consideration given to acquire an asset at the time of its acquisition or construction, right? This is because we don't acquire property, plant, and equipment with only cash. We use other considerations as well, right? We can use exchange, we can use part exchange, we can use full exchange. That is exchanging asset for asset. It's not only cash or monetary value that we use to acquire property, plant, and equipment. So we cannot say it is only the cash we pay that is part of the cost of the asset. No. When we have a part exchange, that is you pay cash, then you added your old property to exchange for a new one, right? Or maybe you use full exchange. You exchange you swap your old property with a new one. So if such occurs, we use the fair value as the cost, right? We'll explain further on that. Can you still hear me? Please react if you can hear me. Let me see your reaction if you can hear me. Alright, so let's continue. Now we have residual value. Residual value is the net amount which the entity expects to obtain for an asset at the end of its useful life. Some people call it scrap value, right? Which is normally used to determine our depreciation, right? I believe we all know that, right? If you are determining your depreciation using straight line method, you can say cost minus scrap value over useful life, right? Or residual value. Then another key term here is fair value. Is the price that would be received. I believe we have treated fair value here. Sorry, we have said something about fair value here, right? Fair value is the price that will be received for the transfer of asset, or that will be paid for transfer of liability, right, in an orderly transaction at the transaction date or at the measurement date. So you come across fair value in this IS 16 as well. Then carrying amount. We also have carrying amount. Carrying amount is the amount at which an asset is recognized in the statement of financial position after deducting any accumulated depreciation and accumulated impairment losses, right? When we get to impairment, we'll talk more on that. I think, yes, when we get to impairment, there's a standard that covers impairment of assets. When we get to that, we'll talk more on impairment and carrying amount. So let's move to recognition criteria. of asset under IAS 16. An item of property, plant and equipment should be recognized as an asset, right, when it is probable that the future economic benefit associated with the asset will flow to the entity, right? Not that maybe you bought the asset but it is another person that is enjoying the economic benefit. As such, you cannot recognize it as your asset, right? Remember the concept of substance over form that we discussed earlier. Remember that concept of substance over form. So it must be probable that the economic benefit of the asset will flow to the entity before an entity can recognize an asset. Then number 2, the cost of the asset must be measured reliably, right? The cost of the asset must be measured reliably. So we move to measurement criteria. Like I said, anytime you hear measurement, it's talking about money. At how much or at what cost do we recognize this asset? That is what measurement is talking about, right? At what cost do we recognize this asset, or how much should we put in the statement of financial position for this asset? That is what measurement is all about, right? So when you hear the word measurement, it is talking about money, like I said. Please, can you still hear me? Can you still hear me? Alright, so let's continue. Now we have initial measurement, right? Then we have subsequent remeasurement. Initial measurement, subsequent remeasurement, right? Now, the initial measurement, all assets are measured at cost. All assets are measured at cost, right? That's the initial measurement. Now, what are the components of this cost? What are the costs that you can recognize as part of the initial cost of the asset, right? So we have the cost of purchase. That's number 1. It's a component of initial cost of this asset or this PPE. If I talk about asset now, I'm referring to only PPE that are within the scope of IAS 16. Remember, we are treating IAS 16. We have other assets. We have tangible and intangible assets. So when I say asset here, please know that I am referring to PPE under the scope or within the scope of IAS 16. So I hope that is clear so that we don't confuse ourselves. So the cost of the asset, the initial cost of the asset to be recognized, like I said, assets are measured initially at cost, right? Now, how do you determine the cost or the cost components, right, of this asset? The components, number 1, we have the purchase cost, right? We have the purchase cost. Number 2, we have the cost of bringing the asset or transportation cost, as the case may be. The cost of transporting the asset from the point of purchase to where it is needed to be used. right? That's another cost. We have any import duty paid for the asset. It's also another cost that is attributable to the asset, right? It's also another cost that you can recognize as the initial cost of the asset. Then employee cost. Now get this clear. Employee costs arising from the installation or construction of the asset, right? If you incur any cost, or if you pay your employee any overtime or any installation cost that you incur on your employee that are trying to install the asset or construct the asset, right? They are part of initial cost of the asset. Then we have installation and assembling cost. If you pay the engineer, maybe external engineer that you hire to install the asset for you, right? Or assembly cost. If you incur any cost on assembling the asset, it is also part of the initial cost of the asset. Now, borrowing cost. Here this borrowing cost according to IAS 23, right? And we just concluded IAS 23. We just treated IAS 23. Now this one is saying borrowing cost according to IAS 23. Now, what part of borrowing cost according to IAS 23 do we capitalize? Right? It is the cost, the borrowing cost on the construction or acquisition of a qualifying asset, not just anyhow asset, right? A qualifying asset. And what is a qualifying asset? An asset that takes substantial amount of time to get ready for its intended use or sale, right? So the asset we are talking about here, the borrowing cost can be included as part of its initial cost, is any asset that requires additional work on it to get it ready, and the work is a must. It must be more than 1 year. It will take a period of more than 1 year, right? The standard did not define the substantial amount of time, but it must be more than 1 year, right? Or one accounting cycle, or one financial year end. It must be more than that. So that is the cost, the borrowing cost that we can include as part of the cost of the asset. If we incur the borrowing cost on assets that is ready for its intended use or sale, like already made asset, we cannot put the borrowing cost as the cost of the asset, right? The borrowing cost will be treated as period cost for that period. So let's continue. We have testing cost to assess whether the asset is functioning properly or not. Now, this testing cost, if you, let's say you are into production, you bought the asset for production of, let's say, chocolate, right? You bought the asset for the production of chocolate. The asset has been installed in your facility, but you want to test it to make sure the asset is working perfectly. any cost you incur to test that asset, like getting raw materials, the raw materials you will use to test the asset, right? Getting raw materials to test the asset, like trying to produce your chocolate to see if the asset, if the production plant will produce well, right? You can include that in the cost of the asset. But mind you, any finished good you get from that test running, right, you will net the sales proceed of that finished product off the testing cost. I don't know if this is clear. I don't know if you understand this. Now let's put figure to it. Let's say you want to test the asset to see if the asset is producing well, right? You bought cocoa and other ingredients of chocolate for, like, let's say 10 million, right, to test it. Now after test running the asset, you got some finished chocolate that came out well, right? And maybe you are able to sell the chocolate for like 8 million naira, right? The cost of test running is 10 million, but the sales proceed from the finished goods is 8 million naira. So what you will include as part of the cost of your asset is 2 million, because you have to take out the 8 million from the 10 million. The balance of 2 million is what you will put as cost of the asset, right? So please confirm if you can still hear me. Can you still hear me? Alright, so we'll stop the class here for today. In our next class, we'll finish this standard IS 16. I don't want the recording to be too long, right? So we'll stop here for today. See you in our next class. That should be Thursday. On Thursday by 9 is our next class. Thank you.